Hello, this is Stephen, webmaster for PetGroomer.com. Today we're going to have a fireside chat that explores inside knowledge for buying or selling pet care businesses. We've been a part of over 400 to 500 sales of pet grooming businesses as management consultants to a small degree to a very large degree. We've been a part of sales for as little as $2,000 to $5,000. And some approaching $1 million. So we've had a lot of experience, and commonly a lot of them sell in the $30,000 to $75,000 range if you're looking for, some sort of interest. What do most sell for? Of course, it just depends on what type of business it is and the size. Now, there's a lot of misconceptions about how to go about selling a pet care business. And I really see every day, because we have the largest database of pet care businesses for sale, primarily grooming, at PetGroomer.com. In the PetGroomer.com classified ads, there is a business for sale section. And we even have businesses outside the U.S. there for sale. We've had several thousand businesses listed there, and we've watched some 2,000-3,000 of them have actually sold that we know of. Some sell and we don't know, but still. So we've had a lot of experience with selling businesses, and probably one of the most common questions I get asked is, how much is my business worth, or is that business worth X amount of dollars, whatever that is. So we're talking about the seller's point of view and the buyer's point of view. And that's a good question. And how do you set a selling price? This is knowledge that just most groomers just don't have any experience in. It's commonly talked about on our message board, and I look at discussions, and you can just see that there's not a lot of first-hand knowledge on how a sale is really conducted. Whether it's a small, again, $5,000 situation to much more than that. What's the appropriate route, and how do you feel good about your selling price and about your purchase? So in this rather short period of time, I don't have a full seminar period. I've done 4 to 6 hour seminars on this topic alone, and we really take it apart. Because ironically, you think, well, a CPA is going to know about this and, tell me how to sell my business and all. Yes, they do know some of the mechanics, but I'll tell you what, they're usually quite far off, both lower and most often over valuing what a business should sell for in the pet care world. And why should they know? I mean, every industry, especially service industries have their quirks and all, and we have plenty in grooming. We don't even have generally adopted agreement yet of not only the licensing or the certification of what a basic groomer is. So how are we going to have even a common idea of this is the right way that a business should be formed and operated, what the job titles are, how it should operate? No, we have a lot of flexibility, and so we all enjoy that. That's no problem with me. We try to just then go by the basics. Let's look at the financial performance of that business and what we're getting with that business, what's coming along with it. And these things are going to help us then come up with either a fair selling price or a fair price to pay for a business. And I have lots of interesting stories all in between all that from actual sales, having been a part again of several hundred of them. I've seen many things, and we'll try to share some of those today. First off, let's look at why is it good to buy an existing business. In fact, especially in today's rather lackluster, the second Great Recession, perhaps even a depression, but the media doesn't want to say it, but we're on that borderline with this economy. It's a very bad economy. It is stabilizing, but it's still a bad economy. Not the best time to sell. That's just basic knowledge. When credit's flowing and things are booming and people are spending, yeah, you're probably going to get a better selling price in that. Right now, credit's very tight. And so what does a bank usually say? Well, we are doing some business loans, but are you a startup or are you buying an existing business? Oh, that's the biggie. Some just flatly out there say we do not make loans for startup businesses. Now, if you can show us a business you like to buy, we might consider that. So why? Well, startups are riskier. That's all there is to it. They look at what? Numbers, tax returns. They want figures. They want backup. So that's what they can get when they buy an existing business. Now in startups, some are getting so tight realize even when you say, I need this much for that and that much for this, they'll even tell you, nope, you've got to work within that range. And by the way, we're going to write the checks directly to the plumber. So we're going to pay the actual cost. We're not going to let you say it's $7,000. You really spend $5,500 and you've padded it and you've got $1,500 extra dollars. A lot of that stuff goes on. So there's a lot more participation by the lenders today, especially in startups. But we're talking about buying and selling today because even the SBA today still, again, prefers that you buy an existing business because if there's a proven track record that that business has had whatever level of success, the numbers are going to show as we look at that business. There's also benefits to you when you start a business in that as a startup, you have very little cash flow. If anything, it may take you a while to build up that business. Well, what is theoretically you're going to do when you buy a business is what you're buying what that business is already generating in sales. And so it's going to be very important to know that. So if this business is earning $90,000 a year gross sales of revenue, usually from grooming, maybe there's a little retail, say, involved there. Well, that's what you're buying, is that $90,000 potential, just as much as you are some of the hard physical goods that might go along with that, like dryers and some of the improvements that's been made. And that gives the lender more confidence that, first year's always tough. We hear that. Yeah, but first year won't be as tough when you're not a startup. It's just your objective. Yes, whatever you have to do, you got to make sure that transition, that you keep that clientele. So we don't want to get off into the little nuances like that. We do know banks and the SBA prefer, especially in downward economic times, that you buy an existing business that looks like it's performing pretty well, and you write a business plan for that, and you show them that business plan, and you chart growth of at least 10% a year. That's going to help you get a loan to buy a business where they're making loans to new business owners. So now we get back again to this selling price and what's an appropriate buying price. Just as right, the point of view difference, whether you're the buyer or the seller. Well, let's talk about appraisers. Our favorite recommendation to everyone is get a commercial appraiser in there. Find out what that business is really worth. Our second advice to you is be prepared. You're probably not going to be able to get an appraiser to do a grooming business. As odd as that sounds, appraisers would like business today. I'm sure they would. But they have rules. An appraiser is bulletproofs their study to back up what they say is a selling price, a recommended buying price. Look at it from a different point of view. And they are, especially certified appraisers, have a system that they use, and they form a document. And this document could go into, and sometimes they do, into a court of law. It's how did you come up with that? Show us all the specs. Well, when they go to most grooming businesses, unfortunately, we're kind of casual people, a lot of groomers, and some are very casual when it comes to not this grooming, not the pet care services themselves, but conforming with the general principles of accounting. That's a phrase. And to even how many grooming business owners don't even legally follow guidelines to give out job descriptions, employee handbooks. A lot more than you think, even though it's better today. So this is when it kind of comes to kick them in the butt, actually, a few times, even on getting a better selling prices, that they fall back on. They may have great pet care services, but for the mechanics of operating a business in the United States, they get pretty weak. And appraisers will look at that and say, number one thing that turns off a lot of the owners that are selling is, I would like to have your last 3 years' tax returns. They're not going to take a printout from QuickBooks. They're not going to take a little scribblings on paper. They want tax returns. And there's different kinds of returns for the business sometimes, and sometimes it's compiled on top of and within the long form 1040. But they want any and all types of tax returns of the owner and the business performance, because they are going to bulletproof those numbers in their evaluation of what that business is worth. You cannot get around that. An appraiser will only deal with seeing those as many other things, but those are key, because they want to know what you signed your name to as an owner of a business under threat, that it's perjury if you're signing, tax returns are with false numbers on them, or it's income tax evasion. So this makes them feel very solid. Now, appraisers can work beautifully when it's possible. And yes, it does happen. Let me give you an example. My parents sold their business after 25 years in 1986. Now you get into this arena. I've got a buyer on the other side, and here we are, my parents, as the sellers. I think it's worth this much. The buyer thinks it's worth that much. And here we go. Is it going to be a boxing match, or is it just going to be opinions? And is someone going to run out over there? Well, yeah, this person told me they think it's worth over there. And this, no, it's not this and all. What we did, it was nice and clean. We just, from problems to profits. That's the name of our book that we wrote on the business side. The From Problems to Profits way we addressed the selling was, we hired an appraiser, and we hired a certified appraiser. Again, they're like certified master groomers. Well, they're certified appraisers. We hired a certified business opportunity appraiser who came in and valued our business. We gave them the tax returns. In fact, we gave them everything. They could see all the records from the day we opened, by the way. I know that you'll think of, let's say, tax records. Well, they say you only keep them 3 to 5 years, whatever. We kept all the years. And when we showed that to the appraiser, it was like, awesome, that's great. But not only that, we showed them all sorts of other records, which we're going to look at that a little bit further into this small chat. Okay, so records. Now, we encourage the buyer to hire an independent certified appraiser of their own, and they did. It's worth that money. We're willing to look at that. Go find another one. This is ours, you hire one. And they did. And that quote of what they estimated the market value for the business was only off by about $10,000 or $15,000, perhaps lower, as I believe it was lower than what we got from our appraiser. We even resolved that further. What the heck? This is a business selling for, into the 6 figures. It's worth it to spend a few $100 more. And we said, buyer, how about let's get a third-party appraiser again. So it was a third appraisal done by another certified appraiser. And ironically, that one did come out a little bit closer to our figure. And what we did is we just met in the middle. We just met in the middle. And you know how easy that was? And it just resolved the whole play of negotiating, and we just got right into the terms of the sale rather than wondering if we were selling it for enough or they had to worry about whether they were paying too much. Just get around all that stress. And the appraiser scenario, that did it. And we all felt, just looking at things from a legal viewpoint, the buyer couldn't come back to us, and the seller as us wouldn't say, there was a problem here. We had bulletproofed appraisals there. It was again, so no worrying about any issues arising up as to you paid too much, you didn't pay enough, and all that kind of. We use those appraisals. That's where it's nice and clean. So, with all that joy that I just said, here it is, that's the way to go. You're going to find out, if you're new to our industry, that most pet grooming business owners, and I would say, I hate to be generalized, but again, it's been my experience through hundreds of sales, that the lower price the sell of the business, probably there aren't the records and the willingness to share tax returns and things with anyone. And so they'll just say, no, I'll give you some accounting records, and I'll print my printout of what I made in the last year and all that. Just let me tell you, that's fine. That's the way it is. I'm not going to judge it any further. I'm dealing with, the reality of what it's going to be like out in these waters. But I want to give caution to all buyers that printouts from QuickBooks or Peachtree or some accounting program, fine, but do not say, okay, great, these are the numbers, that's it, it's real, and those aren't. Most people who do accounting for small business do not know how to take those numbers and do professional tax returns and to come up with and to adjust those numbers. You just have to say to yourself, okay, these numbers might be correct. You just might be correct. And that's about all you can go with it. If they are not from a bookkeeper, they're not from a CPA, certified public accountant, CPA, they're not from those people, you just got to trust your feelings if you think those numbers are correct or not. Fortunately, most people, though, I'd say 70% though, do have some bookkeeper work when you're dealing with businesses for sale for $50,000, $75,000 and up. And I find the ones when we start getting to $250,000, and I've done some close to $1 million sales, well, those people had CPAs. I mean, that's all there was to it. When you get that kind of money, you're usually getting professional help. Those sales go generally easier because the data is right. If the data is not right, you're in this state of limbo, questioning. So you have to ask for the records. Now, what are you asking for? We call it the financials. There's two things that you want. And if you're a seller, look at what I'm saying here as this is what I need to make sure to get done before I sell. In the United States, in our accounting, we have two types of financials, and I'm going to speak in general terms. We're not here today to make accountants out of everybody, but every business owner should know there is a general term, an income statement, or it might be called a profit loss statement. And yes, there's variations. I want to repeat that. I'm well aware of that, but I'm saying I'm keeping it simple for everyone here. So an income statement for the prior year would be great. So in other words, this is summer 2010. I could let a few months slide, but I'm still going to want some recent months numbers. But if they had already tied into a tax return their 2009 performance just 6 months ago right now, I would like that. And I want to look at that. Then I can take a look at more current records to see if they're not going downhill. Maybe they're going uphill. But there we have a year's picture. So an income statement, and you can refer to one where there was a link to this. It's on the Pet Groomer CD, if you're listening to this from the Pet Groomer CD, our free CD-ROM. Or if you're getting this recording from PetGroomer.com, look for a link we may have there for you that says handouts that relate to this chat. And you'll see there is a income statement. Now, our income statement is saying, this sample, that in the last year, in 2009, perhaps, $90,000 was, quote-unquote, rung up on the register. In other words, all sales-related income. And that would still include some retail sales if it was, grooming salon with a boutique little section, that extra retail. Yes, that's going to be in there. But let's primarily keep this, for sake of ease, at services. So it sold $90,000 on the register, rung up for the total gross sales of grooming pet care services. We're also then going to see on that the operating expenses. That's the general term, operating expenses. Now that's, some people, the word overhead. It will be the wages for any employees. It will be utilities, shampoos, sharpening, bookkeeper, license and fees. Those are operating expenses. Then the bottom line is what? Well, we often will see this term, net operating income. That number is derived by taking the gross sales, in our case 90,000, and we subtract the 64,000 for operating expenses for the year, and we have $26,000 net operating income. It's really vital that you get those three numbers. And we're going to spend some time on that. And why? Because, yes, this is what we're going to use to figure if the selling price is fair or how to set a selling price. Work with the income statement, profit loss statement. It might be called that. The only other common financial statement is the balance sheet. Briefly, a balance sheet lists all the assets. That will be the equipment. That will be even some things called goodwill. We'll get into that later. It will include cash in the bank. Yet it's offset by liabilities if a lot of money was borrowed to buy those assets. So think of it in very general terms. You have a house for $300,000, but you owe $200,000. So you have equity of $100,000. Same with the business. It has this much in savings, it has this much in equipment, and so, but how much was borrowed to make that? So we have to deduct that, and we come up sort of with equity in the business, just to help those of you who don't know what a balance sheet is. For setting our selling price, we're going to focus more over here back on that income statement. Now, when we're setting or evaluating a selling price, as for the purposes of this chat, we're going to not consider any property such as land and building that might go with the business. So we're evaluating the business opportunity. So remember, when we're talking the numbers here, if the groomer happens to own the building and you're buying the building, that's different. We're going to have to add that on to our selling price. We're just talking about the business opportunity itself here. So what we do when we get this, the current financial, called the income statement, again, we'll look at, in our case, 90,000, 64,000 for operating expenses, $26,000 left over. What you're really buying is a couple things, right? You're buying the potential to make that $90,000, to keep it going and to start increasing it, and counting on, oh good, there's going to be $26,000 potential left over if I can operate that business in the same way as the current owner. So you're getting that $26,000 for yourself, and that's what you figure, good, at least I know I've got that. Yes, out of that 26,000, if you're getting a loan, you're going to have to deduct the principal. I don't want to get too complicated here, but in the 64,000 area, operating expenses, we could put the interest on the business loan, but the principal is not often paid by the business. Talk to your accountant about that, how they book that out. But it's good to know that you have a positive number. The net operating income is a positive number. We do see businesses, in fact, I've done several right now, who only have 1,000 or 2,000 or 5,000 negative net operating income. They're selling because, they've got some problems going on in the structure of the business, their bills, what they've done. It's hard to say. There's all sorts of scenarios that could play out. And if you've got a negative number for a net operating income, you've got to really know that you think you can turn this business around. But that's certainly not going to help with setting a very good selling price, at least from the seller's point of view. So what is often done, again, I'm not a commercial appraiser, so I cannot, and I'm not representing this as a way to, Stephen says, here's your selling price. I heard him. No, I'm not an appraiser. Get a certified appraiser if you can. But I can share with you a rule of thumb that even most accountants know. If we can give them the net operating income for the previous year, and that's great if you can get that right up until like 60 days ago and the year previous to that date. So we've got a really fresh and accurate number. We take the net operating income, and as a rule of thumb, we multiply that by a factor. And that factor changes, though. But in today's not so great economy, that factor, it can be as low as 1 times the net operating income. Let's look at our example again here. 90,000 gross sales, 64,000 operating expenses, and it left the business with a net operating income of $26,000. Rule of thumb says that may be $26,000 times our factor of 1 would be a good basis for an initial selling price. $26,000 for this business. That may not seem like a lot to you, but that is how it's done. Now, I've seen in bubble economies 5 to 7 times paid on the net operating income. Let's take 5 times. So we take the same business, we take its net operating income of $26,000, and we multiply it times 5, and we come up with $130,000 as a selling price. Wouldn't that be nice? But credit will be very free, and generally we'll all be like, the country's doing great, and everyone's buying, that, and we've had those bubbles. Those don't happen too often. The last major one was, of course, during a bit of the early 2000s, but with the 1980s we had a significant one. What happens more often than not now, I'm just seeing businesses sell for 1 to 2 times the value of the net operating income. 1 to 2 times the net operating income. And again, that does not include land or building. We're talking about just the business opportunity. Okay, in exceptional businesses, we have another way of factoring. And this actually was where the appraisers went with in our format for selling a business of it was in its 26th year, actually, when it finally sold, but we started in the 25th year. Businesses that start, having a reputation, broad reputation, and have been around for 10 years, 20 years, now look at ours, 25 years, and backed up with what I'm going to really stress here, a system to sell this to the new buyer, a system to provide confidence to the new buyer. Well, they might get a factor times the gross. Forget about the net operating income. That's good, and it should be positive. Nice positive number there. But sometimes they'll say this business is worth 1 or 1.5 times the gross sales. In this case, it would be take the $90,000 gross sales and multiply that times 1 time. And they'd say this business is exceptional. It's Y, and it should be worth $90,000 as a starting selling price. Perhaps $135,000 if it was 1.5 times the gross sales. What's typical of these businesses? Very, very important. This is what, again, for our sellers that are listening to this. It's your system. Buyers want confidence. Appraisers look for confidence. You may say, yes, I'm going to stay with the business and help you through the transition. That transition time goes very quickly. What you can do, and I would get a copy of our book, From Problems to Profits in this case. In fact, we have sold many copies to people selling their business to say, I sort of follow this, or I did follow it. Whether they did entirely or not, that's up to them. But they do say that I'm giving this to the seller because they realize that the buyer wants confidence they can run it the same. They know they may become overwhelmed learning from you for a 2-week transition, of 12-week transition. That still isn't a lot of time to learn all the ins and outs of the way that you ran your business. So what we did with our business, and this was before we wrote the book, is we had my mother's marketing program in writing. We had her client relations program in writing, and all the forms and brochures and all the legal contracts that you see in the book. Everything, how to run that. But we had special time cards for the employees. We had floor plans for the business. We had emergency reports. We had, it was something that you would say, oh, this is more like buying a franchise, where they just have everything documented in a big operations manual. Indeed, do that. If you want to sell your business for top dollar, I would say to you, where is that operations manual for your particular business? You don't know how to do one? Get our book, From Problems to Profits. Look at those chapter titles. Client relations program. Yes. Do everything about yours. How you schedule, when do you start the Christmas appointments. Any and every detail, put it in writing. It may seem like, oh gosh, we're out of time to do that. Do you want more money for the sale of your business? That's my question. I can only tell you the maximum value it will be given to businesses that have everything about the operations documented, bound together in a binder to hand, and to the buyer or even a potential buyer. That, well, look at this business. We've got everything here. We know exactly how this is going to run. This is a little Bible of how to run this business, and I feel more confident. I think I'll buy your business compared to others. In fact, I think I'm pretty happy buying your existing business rather than doing a startup, because then I have to write up my own startup manual. So that's key. This is how we do. One of the reasons I'm called in is as a consultant, and I don't do this much anymore because it is a lot of work, and that's why we're making our tools at the groomingbusinessinAbox.com site. Is you create your own. In fact, I have smart grooming business owners who are buying our Pet Grooming Business Plan Helper, and they're writing the business plan for the buyer. It's not that hard to do. They take their existing financial performance, put it in year 1 of the projection sheets, and they work with them, and they show this is what you can turn this business into, rather than just an ad that says we're turning away lots of business, today and every day, and you could double, you could triple. put it in writing, put it in, and you're not saying they're going to do it. There's no worrying about fraud like that. You're just saying this is what this business could do if you want to open it 6 days a week to 7 days a week, to adding the swing shift evening grooming, or etc. See, this is how you sell a business for its top value. And that's the kind of things. Now, if you show this operations manual for your business and give it to the buyer who's going to love it, and the buyer says, and this is what comes with the sale of the business, the SBA or even a private investor is going to like that you have the information, the system that's been proven to run this business. Then again, also in our higher sales, I always suggest to everybody that you trademark logos for the business. Now, many of you do that, but I'm going to tell you something. You want to save a copy of every time you use it. Do you use it in a coupon, in a magazine, or in a local newspaper? Save a copy of that newspaper. Save a copy of that, and because you want the date on the newspaper's page. Don't clip it out. Save the whole sheet of the paper. You want to show that you've used that that mark in all these different ways, and build up the goodwill factor. Goodwill is an intangible. It's like, a $20,000 set of stainless steel cages. That's tangible. I can touch them. Intangible is I can't really touch it. It's intangible, untouchable. But I do know this business has used this logo, has a reputation in town, has been here for 25 years, et cetera, et cetera. And that was put on our business, and though we're talking more than 20 years ago now, so it'd be well in the six figures now, but that was an intangible, and it was valued at about $100,000. So that was the goodwill of the business. You can only do this by creating the system and keeping records of everything, just building up a little bit of a legend, even of your small shop. Don't let that. I'm just simple Steve. I have just a little shop. Well, the selling of your business is the biggest factor to a career change or your retirement. Owners have to pay all these expenses daily, going out. They get what's left over. You got to pay all the employees before you can pay yourself. Got to pay the landlord before you pay yourself, right? So you only get what's left over, and then how much of that you start to pay taxes on, and hopefully you get to put some and invest some in something. But if you don't get a lot, times get tough, whatever it is. Well, but I know when I sell my business, I'm going to get a chunk of change because I'm going to sell this. Well, you're not going to get something great if you don't do some of the footwork that I'm mentioning here, and to do it all the time, and to sit down and to keep magnificent records today. It's easier with computers today than it ever was before. Build a history of your business, how you do it, document that system for it, and make that part of the sale. And get an appraiser. Wouldn't it be nice for you to go ahead and show the appraiser your tax returns? And great. And you're going saying, someone says, well, why are you asking that figure? And I go, but I have an appraisal for this from a certified appraiser from that real estate brokerage firm down the street. That's pretty solid. And it makes it, a lot of people who do buy businesses will get their CPA's opinion. And yeah. Well, when they see an appraiser's opinion, the CPA is far more likely to just endorse what's been given to you through that. So I hope we got some of the early information here out. Now I'm going to bring in some of the more inside knowledge. I happen to have worked for accountants for a period of my life, worked with accountants decades. I'm still occasionally part of sales, and so I'm listening to their accountants. And I have some interesting inside knowledge here to tell you that most accountants really don't value a grooming business correctly. And yet, I'm not saying that they don't know what they're talking about, but they don't know the inside, the intrigue, how our numbers work, quite like anyone else. We have our unique ways of operating grooming businesses, and there are some mistakes that are made along the way. And then when I talk to the accountant, they go, really, that's interesting, and I'll explain this to them as well, and they get it, okay? So I want to give you some of this really inside things to think about, which will help a seller back their price, which will help a buyer to know what that selling price, is it accurate or not. Let's go back to that financial example again. 90,000 gross sales, 64,000 operating expenses, 26,000 net operating income. All right. You are going to buy this place, and you're thinking, okay, that 26,000, if that's okay, and that's fine. 64,000, I wonder, really, I need a breakdown of that. Well, yeah, you can usually get that breakdown, and I'm going to want you to get a breakdown, but it's pretty standard on a correctly prepared financial statement. The factor here is, are you the buyer? Are you going to groom or not groom? That's a huge, huge question, and only based on, perhaps 30 or 40 situations where the buyer said to me, I think I need a little help. This business is doing this and that, whatever and all, but I'm not going to groom. I'm going to buy this business, and I need to know a fair selling price, but I'm not going to groom. And I say, hold on. Generally, the rule of my thumb is you can convince me that you could buy a grooming business and that you want it, but I'm going to say no first. So we have to get over my big no. And they say, what are you saying? I shouldn't buy this. Well, I have even clientele that are groomers of businesses making $300,000 to $500,000 a year gross sales. And do you know that it's wonderful to grow a business in that sense, because it helps the owner take care of their body. They really should be putting the clippers down some as they go along and managing a little bit more and keeping the well-being of their body. But I'll still find a lot of them who will do 3 or 4 a day, and I'll say, yeah, you're still, they're usually quick and all, but I'll still put in 3 hours a day. Well, why? Because they want to help have the full value of that grooming fee outside of perhaps a small amount that goes out to a bather to bathe the dog, but they're putting that money sort of in their mind, in their pocket. It's backing their steady paycheck coming out, because they know the big statement that groomers are not overpaid, but groomers get an inordinate amount of the share of the ratio of a grooming fee. I'm trying to find easy words to use. I start falling into working with accounting professionals. I get used to using some big terms. I want to make it easy for you. But let's go back, because I don't want to, inflame the thinking groomers are overpaid. No, I never say that. But they do get a much more larger share of services than other industries. Point in fact, and I had a talk with John Stasko about this, and maybe John listened to this and remembers some years ago. And I reviewed with my accountant, after he reviewed, I believe it was with an accountant, that the norm should be in any service type business, that payroll should be about 30% of the gross sales. So in other words, in our business, example here, 90,000 gross sales, 30% of that would be about $27,000. And we might go to 35%, saying, 32,000 perhaps. But we know that most groomers, even if they're on a salary and you convert salary over to what would be the equivalent in commission, it's going to be 50% or more. So already we know in our example, we're not talking $27,000 to $32,000 out of that 90. We're talking about at minimum 50%, $45,000, half. Don't worry yet about all those benefits and all the extra costs of employer taxes. It's inordinate. And why is that? It is not the groomers, and don't take it out on the groomers, and don't take it out on the owner. We have to understand the owners are dealing with a situation, a characteristic of our industry. It's because we cannot get the same fees for the same hours very often that a professional hairstylist in an upscale place might get. I know my mother will go for an hour-and-a-half appointment and her girlfriend to a sort of upscale place, but when it's coloring and whatever, it's an hour-and-a-half a time. They're going to put out at $125 to $150, $160 here in our state. Well, we know for an hour, hour-and-a-half of grooming, you aren't often going to get $150, $125. I mean, consistently. I mean, you can count on it day to day like a hairstylist does. Well, what happens with that then is that we create this problem to where we're not overpaying groomers, yet they're taking often the majority of the grooming fee. Okay? So it's a bit quirky. And this is going to go back to how we're going to set a selling price. So I'm going to want to tie this in. So what we have to look at is that labor is by far incredibly almost double the normal standard of the United States of America's basis to run grooming businesses versus plumbers, versus steam carpet cleaners, etc. They'll come into that 30-35% ratio, not 50, 55%, 60%, okay? So we can work with that. That's what if you really study our materials in Grooming Business in a Box, from problems to profits, the seminars, and etc., you learn how we can make great profit. You can make great profit in grooming, but you got to know your numbers, and you never sacrifice quality and the care of the pet. That's anyone who says to make more, it means you're sacrificing that. That's just bogus stuff out there. That's a lack of information and coming to a conclusion without first getting all the information. Period. Let's move on. So, let's go back to the sample again. 90,000 gross sales, 64,000 operating expenses, 26,000 net operating income. Your number one question, and this is what the CPAs don't ask and really factor in, this is what a lot of new buyers don't factor in, and it's what sellers often don't remember to bring up, and this is really going to help the seller sometimes. What's going on in that $64,000? Let's say that we find out in that $64,000 of operating expenses that $30,000 went to the owner. They incorporated the business, and when you're incorporated, remember, it's not like a sole proprietor. A sole proprietor is where you just operate by the owner with social security numbers. You don't have EINs, employer ID numbers, and things like that. They just take what's left over, and that's what's left over. Here in a corporation, they'll usually take a steady paycheck and then get bonuses and extra money left over. So what we want to always target immediately is, that old net operating income, but we want to jump up and look in the operating expenses and go down and look for the payroll and ask for a detailed accounting of who got what. But my first question right off the bat, before maybe I even want to go through all that, is owner, current owner, is in this $64,000, I see that we have wages booked at $36,000. Did you take any money out of that? Did that $36,000 include any wages to you? Well, if it didn't, we're back where we started a few minutes ago. The owner buying knows that whole $64,000 now is going to go out the door no matter what. And they're looking to keep the $26,000 a year and probably thinking, and under my management, in the next 2 years, I'm going to double that. But that's all that they have a potential to do, is to keep that 26 and let it start growing under their new business plan, their new management. However, think about this, though. What if we do find out this is an incorporated small shop, and the owner decided to pay themselves through paychecks, and the owner did book out to themselves, well, I'm going to actually say $24,000. So if I buy this business, and I am a groomer, and my plan is to be an owner groomer, in other words, I'm taking over precisely the same position as the current owner, well, then I'm not going to have $26,000. I'm going to have $26,000 net operating income, plus I'm going to start taking that paycheck of $24,000. Well, that improves this picture a lot. Now I'm at $50,000 a year, roughly. That's going to be gross wages, gross draws that could come to me as the new owner. Okay? Big difference, 26,000 versus 50,000. Okay, I think you can see that. So what a seller should be saying is, here, this is the financial statement, just as we have it broken down. You're looking at the sample. But realize if you're the owner groomer, you should look at about $50,000 for yourself, as we just explained. That looks a lot better, because if they don't bring that forward and really stress that point, well, look at that. The potential buyer is going to say, oh, yeah, but I'm just looking at $26,000 for this and whatever. Okay, so it makes it all the more stronger to say this business is then even worth 2 times the net operating income, because 2 times net is $52,000. Doesn't that sound similar to the 24 plus the 26, the $50,000? So it's very important, if you are the owner, to identify all the revenue that finally comes in the door but makes it to you personal to you before you pay taxes. We'll say that. It's that revenue that is adjusted for expenses and is then left over for the owner. Now, we get to my biggest caution, where I started a few moments ago. And my big no is, don't buy a business if you're not going to do some grooming. Of course, there's exceptions to that, but 99% of the time I hold there, and I don't worry about it. That hey, what are you doing? Don't kill my dream. I know it's your dream, but I want you to fight for your dream, because you need to fight for your dream, unless there's some other factors going on. Let's look in this situation that we just had again, so you can see the difference, that a same set of numbers, but a much different picture. We're looking at 90,000 gross sales, 64,000 in those operating expenses, and you're seeing that $26,000 there. Okay, just realize it may be a situation like this. 90,000 gross sales, $64,000 operating expenses, 26,000 left over, but you may lose that 26,000 because the present owner wasn't hardly grooming or not grooming. They didn't book any paycheck. They just lived off of that $26,000. So it's getting a little bit more bare bones bottom line there. You may even have to hire extra help. And if you hire any more help to do in this situation, you may be taking it and knocking that 26,000, chipping away at it, and it gets smaller and smaller. And I've been a part of, like I said, at least 30, 40 of these. And it was like, but Stephen, I really want to own this business. I want this career change. I want to own a pet business, and it's going to have grooming, and I want this business. Okay. What do we got to do? Okay, we got to realize that you're going to generate very little from the grooming, because that owner that was grooming, you're going to have to hire help, new hired help. In other words, you're going to beef up the operating expenses that are already there just to own that business. And that came out of the $26,000. So where's your, you don't want any revenue from this business to make it into your personal household pocket, because that's the great way to do this, and, work all day. And there arises anger. Some of you will have, maybe even that listen to this, have worked in a situation like this. I do have situations where, quite a few over the years, where the groomers are making more than the owner. They may even have 5, 7, 8, 10. I've seen one in California with like 15 employees, and you had $60,000 to $80,000 a year groomers, and the owner, after paying everybody, was making $20,000 a year. And then you wonder why an owner gets frustrated or gets attitude when the groomers are making so much more. Same thing also, I do have, it's kind of this more, a little bit of humor in that I do get veterinarian clinics, and they listen to the American Veterinary Medical Association, and they who says get the ancillary services in there, you need the cash flow. Hey, but heck, Steve, I've got some graduates coming out, they're new veterinarians out in the real world, and my groomers are making 2 or 3 times what they're making. And I go, well, that's what it is. What can I say? Okay. So there are some solutions. If you're one of the persons that want to own a business with grooming, you're more likely, you need a lean operation, but you need a large operation. This is where it does work better, where there's a business making $300,000, $400,000, $500,000 a year. More likely that you can at least have $50,000 or so left over for yourself, even after paying the groomers good wages. But here's the next key. It's time to sometimes look for additional sources of revenue that you can do. Let the groomers do their work. You're obviously not grooming. You've got to learn how to manage them. You've got to take care of these artists, stylists, and understand that, which is a unique management challenge. They have different kind of personalities than most other workers. Here's how they, to operate them. Now, why don't you add on a boutique, or why don't you add on something that can be under your management? These kind of owners do very well being up at the front counter delivering superb service. My parents' business was a case. That was my stepfather. He was one of the best groomers I've ever seen in my life. Fast, and I sat many years just watching him, because I did customer relations, or I came in after school just to spend time there. You'd be amazed at how fast you can groom perfectly. Perfect work. He also did many dogs for the handlers would even come by and have him groom for like the big Golden Gate show. He was an awesome groomer, but more than that, he was just naturally fast. But he didn't even do coffee, Starbucks. I joke about that. He wasn't this frenzied, nervous person. He was very relaxed, but he was precision-oriented. Every move of his body, every clip. Okay, I'll get off into that. Well, what we've got to do is to see, where did my mother go? What to the front counter? They hardly spent any money on advertising, other than the yellow pages in those days. We didn't have the net in those days. But we were booked 7 days a week, almost the whole year. Of course, California helps not having the harsh winters and all. But we had to even go into evening services, whatever, and we're not hardly advertising. That was just something that just wasn't done. because with my mother at the front counter, you had someone who was really a genius with client relations and marketing and pet owners. I mean, they wouldn't go anywhere else, and they told all their friends that you don't go anywhere else. Some of you know that. They're listening to this, and some of you that are listening to this will become those kind of people. And she had the full time of the day to do that, except it was great to have a backup groomer to fill in when someone was sick, and she could do that. So what else could she do? Well, then she could sell retail. She could run more revenue generating departments within this. So what I often do with owners coming in saying, I'm the new owner, I'm not going to groom at all, I'm going to hire that groomer. Okay, with boutiques. And that's a whole separate story because, you can buy all the retail you want. It's not going to move unless you know how to sell it. That's just the way it works. But let's just look at a potential. You could be, while you're doing incredible management, customer relations at the front, delivering client service programs, you could be selling perhaps something out of that boutique. Food sales. You might even run and put on, if it's profitable, a daycare operation onto it. I mean, there's potential. Some add pet hotel services. Whatever it is, you have to look at the bottom line, but it's more revenue so that you can look to not the grooming department just breaking even or just supplying you with, these groomers over here making $30,000, $40,000, $50,000 a year, whatever, and you're just out of that whole grooming department maybe seeing $5,000 or $10,000 a year. I don't want you to get mad at you're not overpaying the groomers. You just haven't developed multiple sources of revenue. And you've got to say, primarily, my bulk of my salary is being paid from this new retail department, whatever it is that we're running. And it goes on well with my management of the overall company. This is also why do we see superstores with grooming? Well, of course, they found out that sales can increase 25-30% in a retail store that has grooming because of the foot traffic of grooming. Grooming is magical, and we don't really realize that. But these other industries do. Retail found out by putting in anywhere from well-managed self-service tubs to full-service grooming, more foot traffic. The more foot traffic, the more likely they are to pick up some retail. As I mentioned, the American Veterinary Medical Association, in its materials to its members through its journal, recommended adding grooming services. That's why back in the late 80s, and especially primarily the 90s, you saw more build-outs of departments within the veterinary clinics because they need the cash flow. Their profit margins are getting pretty tight today, especially with the advanced equipment and that they're leasing this machine, that, and whatever. They need cash flow, so they said get grooming. But they also know what? Some people don't go to their vet until their dog gets sick or the cat is sick. In other words, the animal has to be ill before I'm going to go to a vet, other than the counties tell me I got to get a license, so they're going to go to the vet. Some owners just don't use preventative maintenance and do checkups of their pets. Compare that to the loyal grooming clientele who wants to come in every 4 weeks, every 6 weeks, every 8 weeks. That's regular traffic coming in. It's a way, without advertising, that people are going to cross through. So that's what I'm going to encourage you who buying a grooming business is to, you've got the foot traffic. What else can you sell to them besides grooming? And that way you're going to channel some of potential for a larger salary just for the owner who's not getting a lot from the grooming department. That's how you're going to make money in this. So that's why I give the big no to a lot of people when they just first thing, or I say stop, just like a big red stop sign. Stop, think this out twice. You have to work the numbers. You have to do a business plan and do that, because I want you to see that by the time you replace the owner groomer who was grooming and pay for them, you're going to have very little. The books are going to look entirely different. This sample that we just did here, a lot of that $26,000 a year could evaporate, and that's why there are owners that make far, far less than any employees. Owners should, basically, the rule of thumb is, know how to groom. They should know how to groom. That's all there is to it, and they should do some of the grooming that's in a place. But as they grow, and they need to grow. If they want to groom less, then grow the business, be able to put the clippers down and add additional sources of revenue into the business. That's the formula that works. So now we've looked at that with our how it affects then our buying and selling price, whether that appeals to you as a seller or whether that appeals to you as the buyer. Okay? So in summary here, you've got to know the path that you're going, and you should write a business plan for every purchase, because a business plan makes you project. You should always look to see if you can, how much you're going to make, and account for any changes in costs, because you're going to change an existing business. Count for those very carefully. Be conservative. Those of you writing a startup plan, even, be conservative. Under promise, over deliver. That's the magic little formula. Know that you can get by with not so much. By the way, when you go down to buy a business, besides giving them, if you're buying a business, the numbers, and of course this would still apply even if you're going to do a startup, is that they're going to want your household figures. What's the cost of your household operation? Does your car, your insurance, your utilities, your food, your clothing allowance, your travel allowance, a rent or mortgage, all those have to be paid until the business makes some money, right? It's being derived from that. Hopefully you have another source of income, which may be a spouse or something like that. That helps when you're buying a business. I just want you to know, they're going to look at that very, very, very closely when you're buying and selling a business. If you're buying, they're going to tie in what is the bottom line for that business now. Here would be the $26,000. If that's yours, how are you borrowing that 26, which means you got to pay back that 26,000, but on top of that, you've got to live off that. Well, what if your bills are $40,000 a year? 26,000 after taxes today is, I'm just going to guess, it's $18,000 after taxes. Well, how are you going to pay for your household budget? Hopefully then you have to have a spouse or significant savings that will convince them that that's an okay idea. So learn to use these tips. Get some idea of the financials and work with them as we've talked about here. But now, before we close, I want to bring up some of the illusions that go along with buying a business. I have seen many, many ads over the years for a business that'll say something like, I have 2,000 clients that I'm including in my cell, and our business grosses let's just say it's $100,000 a year. And of course, that big old stop sign that went off, well, this is my big old, what is it, no way kind of sign comes up. There's something wrong here. It's the most common problem, other than, just way off pricing and what someone's saying they want to sell a business for. It's the number of clientele. Yes, when you're going down to and you're buying a business, you are indeed buying perhaps the amount of time left on that lease, and can you can you continue to lease this place so you don't have to move the business? And it's coming with this furniture, fixtures, equipment, display cases, so many, and supplies, and everything should be detailed. People, please get onto your contract to sell. And yes, every sell needs an attorney-reviewed contract to sell. But I'm telling you to avoid confusion and problems that I do see arise constantly. You go in, you bought it, and I thought, well, where's the third cage bank? Well, I wasn't including that. No, you want a detailed shopping list. But the other thing is this very interesting inventory. What is it? The clientele. And I'll say, now, if you've got a pencil paper, look at this. 2,000 clients. $100,000 a year is being claimed as generated from 2,000 clients. I know that's way off. I know that's super way off. And why they're doing it. And it's usually not for fraud. So we're not putting out a fraud alert here. It's a misrepresentation is the better word. Without intent usually. If I have even 100 clients who happen to come in 6 times a year, that's every 8.33 weeks, that's 600 appointments in 1 year from what? From 100 clients. 600 appointments. Say we multiply that times $40 as the average service fee. Okay, that's $24,000. Rule of thumb, general, is created by 100 clients. I want you to get that. I'm going to repeat that. Let's just say you have 100 clients with only 1 dog, 1 cat, but they come in 6 times a year. So 100 clients create 600 grooming services in a year. Multiply that times your average service fee, in our case $40. So 40 times 600 appointments is $24,000 rung up on the register. You like it that way? Rung up on the register by 100 clients. Over here, we had someone say they rang up $100,000 in a year. So that's just a little bit more than 4 times the 24,000 we just talked about, right? That would be 96,000 if we multiplied it times 4. Well, but that was done by 100 clients. So to multiply it times 4, that means I'd need 400 clients coming in 6 times a year with 1 pet. Multiplying that times the 40, that would be $96,000, which is pretty darn close to this advertisement over here saying I've got 2,000 clients generating $100,000 a year. Well, heck, do you see the problem? They don't have 2,000 clients. 2,000 clients, even if they only drag, the pets in. I mean, you're dragging them to come in. Come on, that pet needs to be groomed more than once a year, whatever. Even if you're in this, 2,000 clients 4 times a year is 8,000 appointments. We're talking a business that would be huge, and this is more like, I know that from my parents, that my parents came out to roughly at one time to having about 6,000 regulars, of which 90% were in an appointment scheduling program. That's how you make those kind of big figure salons. So I know that this person has misstated. Yes, go by the number. If they're saying they make $100,000 a year, go verify that. That's easier to do with tax returns or with whatever they're going to hand you that you're going to need to, do your own bulletproofing and figure out whether they're just did some creative, programming on their QuickBooks or Peachtree or whatever it is and coming up with that number. Hopefully you've got some tax returns to really bulletproof it down. But this person over here, you don't need 2,000 clients to generate $100,000. That would be people coming in only 1 time a year at $50 each. So we know that number's off. In my case, through studying files like this, I find what they're saying to you is they've had 2,000 people come in. They may have saved all their client file cards or never purged their computer records into just who's the active clients. And so the number of clients is almost always wrong. I'll just simplify it here. That's right. We're on a simple chat here. The number of clients is usually wrong when you get this. And so what you want to do when you're buying a business, or perhaps you're just a smart seller that, bigger numbers is not always better when you can't prove it. And when it's out of sync, like these examples like this, that only is going to put up caution flags with someone who's get smart. Okay? So be accurate. Go through your records. And my rule of thumb is, similar to in our book From Problems to Profits, we had an A, B, C, or D rating for every single customer. There was never a customer or client. Remember, customer is the first visit, client is repeat business. When they come back and they're bonded to you, you start turning a customer into a client. So we rated, and the rating could change occasionally, but it was part of our scheduling program, depending on their habits for advanced scheduling. But the D was a client who had not been in for 4 months. In other words, I have had many of my clients who I really take their hand through an entire purchase of a business, and I say, sign a disclosure if they ask, don't take the records off site, but I want you to analyze every customer card or customer profile in the computer. Which are the ones you're willing to buy? Personally, I am not willing to buy a client who doesn't come in at least 4 times a year. And in our business, our average client came in every 6 to 7 weeks when you averaged everything out. Yes, we still had some that are only seasonal, it seemed like, or 4 times a year. But then we had some at every 2 weeks, every 3 weeks, every 4 weeks. So, you start to learn how averages work. Our average client, and a lot of, people perhaps that are in this industry know, it's nice when someone comes in every 6 weeks, and if your average is somewhere about in that range of 4 to 8 weeks, the middle is 6 weeks, those are good clients. That's who I'm buying. Yeah, I just got to still win them over through the sell of the business and all, but those are attractive clients, and now I can budget correctly. If I started budgeting over here with this person telling me they have 2,000 clients generating $100,000, that's just garbage in, garbage out on a computer in these programs. That is doesn't make any sense, and all my picture is going to be wrong. So I start by verifying the number. Then I ask to sit down, and they can leave. In other words, I'm not hiding. I'm writing down phone numbers of their clients so I can do something terrible. Most reputable people will allow you to examine if you look like a serious buyer, and they should be able to watch you. You're not taking these cards home. You're not taking a printout home. You just are going to go through, and you're going to look at the last year activity for every single client and get a good ballpark figure for how many active clients. And I suggest that you may even have 2 categories. Those that have come in at least 4 times a year, those coming in at more than 4 times a year. How many of those clients are there of each category? Now you can do a Pet Grooming Business Plan Helper projection style far more accurately, because you've got reality. You're working with reality and not sales wonder. 2,000 clients making sounds wonderful. No. So watch out for that. It's very common. And I think since I've talked about this more times, I noticed that fewer businesses will even spec out how many clients they have. I guess we got smarter people as we get more information like this circulating in the industry. And it doesn't make any difference. That's only a wow factor. What good does it do? It's going to be what those clients generate into dollars ultimately. But that's the other biggest area of misunderstanding and misrepresentation that goes on in our industry is focusing on the number of clients when you're buying a business. It's number two, work with the numbers and then whittle down to a real number through your hands-on with those records if you're a serious buyer, what that number is, and then work with your projections from that basis. So we've been chatting away here for a while and gone into a bit more detail than I expected, but it does show you that there's a lot to buying a business, misconceptions, and I do urge you to work with professionals, but remember that professionals, I often find, again, in summary there, that the accountants will often overvalue. It's just been my experience. I can't tell you why that always happens, but they kind of look at our businesses like, well, it must be like these other businesses. Most accountants' jaws drop when they look at our books and find out, because we often pay, whether it's salary or salary based on commission, that 50% or more of the gross coming in on the door is going out to employees. It's a shocker. It's an absolute shocker to accountants. They never knew this would exist. It's quite shocking to them. But they also can see that some of us did quite well and made well, and wow, that's great that you can do that. And and still, because gosh, I was trained that 35% should be what the payroll should be held at. Well, we just can't do that in grooming. That isn't the way that it works. So we look at other ways of wisdom, and that's what we call the Madsen team trimming and other features. And even ways for the single one-person business, ways of keeping our costs in line. And so in summary, if you need additional help, you can always check in. We have wonderful people at the Groomer Talk message board. I do answer some questions even there. As I said, I don't take many new clients. I have 20 years now with an established client base, and I try to satisfy them with their calls as things comes up. But you're still willing to try. One of the best ways is post on our board. We've created a place where a lot of groomers are sharing knowledge, where we're networking together. Many of them have gotten a little older and wiser, as I have, by working with them, and they have working with me at that place. So you're welcome to come in with questions about buying and selling on the board. But when it gets down to the hard legal moves, do work with contracts of sale, do your study number, write a business plan for every business you purchase, or consider writing a business plan. Very easy, using Pet Grooming Business Plan Helper for the buyer. Sellers, you want to sell more, it comes with a business plan. Put in your current operation. I'll show you how to do that. We're adding a chapter even how to easily do that to the current program, and say, and this business comes, and it's like, here we've charted everything. Give the buyer confidence that they can run it. If you're going to be the owner that's not going to groom, you may want, and I'll help you in a short conference call if you do need that kind of help. You may have to wait a week or two for I can help you, but I will help you as I can for a modest fee. Go over that if you don't understand it, because I've just had a part of just these sales where people really didn't understand that, and all of a sudden they go, but the other owner had $25,000, the other owner had $50,000 a year left over, why don't I? Well, you're not grooming, and that owner was grooming. It's as simple as that. But if you don't understand that, please do check in with us. If you're interested in any of our commercial products, we go with groomingbusinessinabox.com. That's for the commercial products of Find a Groomer Inc. Otherwise, check in with the wonderful Groomer Talk community at www.PetGroomer.com and start there. We have many people that are doing their business plans that do come in and ask questions here or there, or what do you think of this price and that price? You just must keep it private. You do not mention the name of the business that's being sold and whatever. We